gurus here, South African Silicon Valley gurus. We have Miss Ayanda Kuba, who will also be introduced by our moderator. We have Lebohang, we have Khomotso, we have Akona here tonight. So, and most importantly, I'd like to encourage you to please engage with us. These are exceptional guests in this sector. And most importantly as well, thank you so much for your time this evening. Welcome to each and every one of you. You've lent us your most important commodity, which is your time. So we'd like to use it wisely and make sure that we make the experience an invaluable one for you. I'd like to hand over to Octavius to take us through the evening.
Thank you so much, Disebo, and for that opening and welcoming everyone to the session. And I want to greet everybody else who's connecting to and joining this conversation anywhere else they're connecting from. It's an honor. It's a privilege. I think this is such an important conversation that we will be having tonight, and we're honored to be having in our midst, a group of people who are experts, who are very experienced, who are voices that are leaders in the fintech space. And I think continuing on the conversation that ABSIP has been having in the past couple of months, as really centering the conversation around digital disruption and understanding what opportunities and what challenges exist in the financial services value chain, and how we bring all of this in our day-to-day life, whether we're prepared as we sit today, if we're prepared for the future, if we are resourced or capacitated enough. And I think this is the important conversation that we're going to be having tonight. And this is again very critical in how ABSIP has kind of molded the conversation on this part. So we've got in our midst a group of panelists that will share their thoughts. We are happy to have these guys coming from multiple industries, really just going to talk to fintech and what that looks like, and how do we move forward, and how do we prepare ourselves for that, right? So that's really going to be what we'll be talking about today, hoping that we can get out of the session understanding, basically understanding where we place the disruption, what are some of the important factors that are occurring, what are some of the infrastructural needs that we have in place, how do we as people, or the guys that are playing in the space, in the ecosystem, how do we continue to foster this innovation and really build our country and contribute to the growth of this economy. So I'm going to just quickly introduce the panelists that are going to share these insights and these views with us today. We have Akona Bashe, who is the head of fintech integration at fintech integration at Liberty. We also have Khomotso, who is the CIO at Standard Bank. We also have Lebo. I'll share the full profile of these guys. Their CVs are long, right? And they will have their time that they're going to share with us. So I'll share with you guys in detail what are some of the achievements that they have, their credentials. And of course, we've got our main speaker, Yolanda Tuba, and allow me to read her profile because it is magnificent. As somebody who we believe most of us have looked up to, a lot of investment professionals, accountants, auditors, entrepreneurs alike have always looked up to her. So she was going to take us through her thoughts around this subject, but I want to quickly give you an overview of who she is. Most of you know her. She's not a stranger in the South African ecosystem. She is an experienced executive who has demonstrated history of working in diversified industries, including FMCG, telecoms, and services. She is very experienced when it comes to operational management. She's managed a lot of mergers and acquisitions. She's done global strategy. Most of us know her from that. She's also played in the private equity space. very experienced also as a non-executive director in the diverse set of companies, for over 15 years as of today. I did not even know this until yesterday when I spoke to her. She is actually a chartered accountant, holding a master's in commerce, focusing financial management. So again, this is, always say, I think the president of ABSIP usually jokes and talks about how, accountants, they are always very strict on structure, if it doesn't, very risk averse and whatnot. So I really am looking forward to hearing how a chartered accountant, who has led all these transformational things happening in different industries, going to talk to us around fintech. She's not going to be presenting showing any slide. She's going to be talking to this. She's an expert. So I want us to really give the time and the chance to Yolanda Tuba, who's going to take us through her thoughts and her views on fintech and how it's disrupting our lives. Yolanda?
Thank you so much, Octavius, and thank you for that beautiful kind of introduction. Firstly, thank you for everyone for joining us. I mean, the fintech story is an interesting one. In fact, the digital transformation story is really a fascinating one. So for us to be part of the conversation is really important, so that we are part of actually structuring and creating the future that we want. A friend of mine actually often says, Yolanda, the Stone Age did not end because there was a lack of stones. And for me, I mean, when I was preparing for today, that actually kept on resonating in my head. And the reason why this is important for me and is an important concept is that we do sometimes actually sit back and say, we actually start off with a mentality of scarcity. If the MNOs, if the operators, the telecoms operators are successful, that means financial institutions are not. And what has been proven by innovation and the transition from first to second to third, and now coming into fourth industrial revolution, is that actually each one actually creates value, but it's differentiated value. And for me, that's an important concept, that actually as we transition from each one of these phases, it is not only about displacement, it is also about creation. And how we play to that creation mentality is really important. So really for me is to say, the first concept that everyone must grasp is that, this is about creating value for the long term. And when I think about that, I think of the many people that come to me and some of the stakeholders that I meet in different businesses, especially in the financial services sector right now, actually coming to me and saying, Yolanda, if the MNOs actually get into financial services, banks will die. Right? I don't think banks are going to die. I don't think banks are going to die at all, actually. And not because of anything. It's because just the concept of it, because there's no MNO who wants to be a bank, a fully fledged bank. I don't want to be doing home loans. I don't want anyone to be filling out 10 pages of applications. That is not our model. Our model is very simple. Like every other innovation that has come within the technological space, is based on economic value. And as MNOs or as telcos, we believe that innovation and inclusion in particular is a catalyst to value creation. And that's how we've grown as telcos. Once we started actually including people that did not have credit cards. I don't know if most of you might remember, maybe some of you are too young to remember, but to have a cell phone contract, you needed to have a credit card. So a lot of people could not adopt the technology. And what happened is that a company in South Africa actually invented prepaid. And prepaid is what has ensured that there is inclusion. And as a result of just that simple innovation, today in South Africa, we have more than 90% of our population actually using a mobile phone. And that's where the value creation comes from. So for me, from an MNO perspective, I look at it in that sense. I mean, when banks also talk about this sort of mindset around innovation, one of the things that I also say to people that what is going to happen is that banks, as we know it, will change. financial services and how people procure services will change. Because as we come into the space, as many players come into the space, people like Lebu and what she's doing at Catalyst, they are going to transform the space, because what's happening is that we're coming in and we're saying, banks, you used to make a lot of money. You have valuable value pools. And we are only targeting the valuable value pools. That's exactly what, by the way, WhatsApp and the other OTT players did to the telcos. Right? They actually completely decimated voice revenue, because today you can actually make a WhatsApp call at a tenth of the price that you used to make it on a GSM on a normal line. And what has happened is that they also, though, were a catalyst for growth of data, because you are now making a data call instead of a voice call, right? And that on its own actually made them a competitor on one side, but a catalyst for growth on the other side. And it is up to us as financial services and telcos to work together to actually find that symbiotic relationship that actually is in there in order to actually grow. Today, I want to talk about 2 or 3 concepts. One is the concept of abundance. The second one is, why is this disruption actually happening? And the third one is, what is going to happen to talent, right? What's going to happen? What's happening in the world? Let's talk about something as simple as what does abundance tell us, and in terms of how we approach this sort of fintech and financial inclusion kind of mindset. For me, as someone in telco, when I go to work, what drives me is the fact that everyone deserves the benefits of a connected life, right? And that means that we have to deliver services, including financial services, to them at a cost that is reasonable and where they want it. And that convenience factor is what we actually look at and say, how do we take a share of that value, not just charging people because it's nice to charge people. So when we talk about this abundance factor, let's start off with the financial institutions. I'm glad there's no one from a bank here, so no one on the panel can argue with me, Derek. Well, Standard Bank, you're a CIO, so you're not mainstream. You're not actually, now CIOs are mainstream. What am I saying, right? But for me, I mean, the banks had over 100 years to include everyone in Africa. Right now, they've financially included about 30 to 40% of the African population. In South Africa, the story is very different. In 2006, I think we had about 60,000 financial inclusion in this country. And thanks to SASSA, by 2016, 2017, that was up to about 89, 90%. So they have access to a card. However, they didn't have access to financial solutions. And that's what people are saying that they're looking for. And that's where we come in. Where is fintech actually going? Fintech is solving the pain points that have been created by 100 years of exclusion. And basically, what are we doing? We are going directly to things that are causing friction and actually eliminating them. In Lebu's world, again, I'll pick on Lebu today because she's dealing with all these upcoming fintechs and all these exciting people. They're doing lending, right? What has been shown through the M-Pesa case studies over and over again in Kenya is that while mobile money, or in fact, financial inclusion is possible, it only is accelerated by access to finance. And that's why a lot of guys now are going into lending, because that is what changed people's lives. They're solving real problems for people. What else is happening in that space is that we're seeing lots of solutions around peer-to-peer, right? Because we do need to transact frictionlessly between each party, me and you as consumers, and me to a business, or B2C. And those are the services that we're seeing the most traction on in terms of all the businesses that we're looking at. And obviously remittances. In South Africa, not as big as the rest of the continent, however, actually quite significant, because we actually have a lot of people in the diaspora actually serving South Africa. What is making this transition actually easy for MNOs versus the traditional financial institutions? very easily is that we understand distribution. Today in South Africa, I think there's about 29,600 points of present, ATMs and the likes for people. In my ecosystem within mobile money, we have over 360,000 agents that are serving people today. In Ghana alone, where you have a population of around 30 million people maximum, you have somewhere around 189,000 agents, right? That is the difference in the model. That's why telcos are able to get to people. We are eliminating the middleman in order to service people where they want to be serviced. You do not have to take a taxi in order to go and cash money out. You do not have to actually go and ask someone for money when you have a relative that can give you money. So all those kind of things are what is facilitating telcos actually playing in the space. What is the second thing that is actually happening is that in addition to distribution, we understand monetization. You know, for a long time, banks and formal infrastructure, and maybe someone from Liberty can talk to this, is that they said you must pay monthly for your services. If you want insurance, you must pay monthly. But people don't behave like that. We have daily wages in our countries. And as we actually understand the problems of our people and how they live, telcos were able to respond to that. So on airtime, you're able with the R2 to actually buy airtime. And that's what we're bringing into financial services, the understanding of monetization, basically small amounts of money in order to get services. So for us today in telco, for R2 or R3, you can get life insurance. You can get funeral cover. The things that normally will require a monthly payment in the traditional kind of spaces. So more and more of those kind of things are happening. What else is happening is that we are used to a segment of one. So segment of one, it means that I treat you as an individual. Today, if you go to what we call in South Africa, made more for me offers or just for you or any of those kind of offers, they are tailored towards your own personal behavior. It is not an average of people that look like you. So the risk profile and the benefits and the payment that you make is actually based only on your own behavior. So telcos have been doing segment of one for a mighty long time, whereas the other services or the other financial services companies have not been able to do that, although they are catching up, I must be honest. So when you combine this, what does it really mean? It means we are actually redefining what the category looks like. While financial services, traditional financial services companies actually define themselves as insurance or whatever, we actually define ourselves in terms of an ecosystem. There is no one around the table who I sit with who comes from financial services who says, I sell shoes for a living. I do. I've got a marketplace in Ghana that actually sells all sorts of things that we are busy piloting today, because we understand how people live and how people want to live. And just by making sure that the friction in that is eliminated, we are able to provide more and more services to them. Today, we serve over 41 million customers as MTN. By the end of this year, MTN Momo, or financial services, will be most probably the biggest fintech business in the whole continent, right? And for me, what does that mean? It means then that we should be at the forefront of engaging with banks and having that symbiotic relationships with banks and having symbiotic relationship with insurance companies. Because as I said, we are only interested in specific value pools, not everything that telcos actually does. In South Africa specifically, what are my own personal kind of ambitions is that we will eliminate cash. You know, in this year, MTN reintroduced mobile money into the market, and hopefully we will be able to actually eliminate cash within the next 5 to 7 years. We will give access to financial services. When I say financial services, to everybody in this country, not just people who have bank accounts, and definitely not just people who understand fully fledged financial services. I want your mom and pop and someone in the villages to actually be able to have insurance. I want them, if they want crop insurance, if they want insurance just for one trip, I want them to actually have it. If they're traveling from PE to Johannesburg, I want them to be able to have those kind of things on their plate. I want them to be able, again, to be able to lend or to ask for money from us at a reasonable price. So we're using a lot of AI in terms of what we're doing to be able to price lending and behavioral scoring to make sure we optimize on pricing. Ultimately, what does this mean? This means that we are going to propel financial prosperity and economic growth in the economy. If I quickly, I'm just looking at the time, if I quickly go to the next kind of element, which is what is causing this disruption and what about talent? What's going to happen with the talent first that we have? Deloitte already has published a paper on this about two and a half years ago around what's going to happen with talent. Look, yeah, I mean, about 3 or 4 years ago, I went to Silicon Valley, and the one thing that Singularity University there was saying 60% of the work of the lawyers in the US will actually lose their job within the next 5 years, right? And that means accountants included, yeah, because everything that is repetitive will actually disappear. And I guess Hormones, from a CIO perspective, has seen this and how easy it has been to actually eliminate jobs, because technology is actually coming in and actually lowering the requirements for capability. Now, someone who's never actually done a 7-year kind of program to become a CA is able to press one button after 6 months of training without a degree to be able to produce some of the things that we were taught to produce after 7 years. So what does this mean? It means that we're all going to have to learn to pivot our skills. I'm a CA. Octavia has actually mentioned that earlier. However, today I don't talk about CA things. I'm not talking about audit. I'm not talking about any of those things, because we all actually have to pivot. And then if I think about what is causing this disruption, what is making this disruption? Is it because everyone is sitting and saying, we want to go after that industry? It is not that. No one is actually saying, I want to go after financial services or whatever. What has happened is that we have fundamental shifts in technology. The cost of processing has gone down. The cost of storage has gone down. The cost of electricity, which is a catalyst for some of the things that we're doing today, because data has to be stored and it has to be processed, and that needs electricity. And that's why all the technologies that we're using today, by the way, were there in the 50s and the 60s. And we are able to use them today because the cost actually has come down. So for me, if we think about it and say, are telcos the ones that are taking the lunches of banks? No, it is technology that is doing it. And that is what is actually allowing us to be able to do what we're doing. What is the real truth that we need to confront is that we have to actually start thinking differently. We can't think in an analog way, because in reality, if we want digital outcomes, we actually have to leave behind analog thinking. And for me, that is an important factor of how we are actually going to succeed together. I'm going to leave it at that and leave others to actually comment as well.
Fantastic. Thank you so much, Yolanda, for that. I am pretty sure everyone else, I'm seeing the questions in the Q&A flying, coming in numbers from both Tabo. I've seen Tabo, your questions to Yolanda. I've seen Sabelo as well from the tech startup, how they work together. So please keep sending us all your questions. Note your questions, put them in the box. I will make it my responsibility that all your questions are answered. If they are not answered during the session, we will send these questions individually to the panel so that they can address them, because they're important. We want to empower everyone else that's on the call, whether professionals, business owners, entrepreneurs, and just ecosystem partners, policymakers. So if you've got questions, put them in the Q&A section, and some of them will lift them up later. I want to take this time and invite Akona Bashe to kind of give her thoughts and her response and her reaction to what Yolanda has shared. So thank you so much, Yolanda. The points that you're making are very critical. I am confident that right now, there's lingering, challenge around how, you know, some of these things become a reality. So to your point, you know, how do MNOs work in the space to create economic value? How do they, you know, drive inclusion so that you contribute to the prosperity of the different countries? So I'm looking forward to the response from the different panelists, and we'll come later to address some of the questions from the audience. So Akona, if you do have, I understand you've got a deck that you want to take us through. So if you could just please put that, you should have the rights to share your screen that you're going to take us. While you do that, let me just quickly do an overview, just so you guys understand the caliber of people that we have in this panel. So Akona, I've had the privilege of working with Akona. She has been somebody who plays very actively in the space, especially innovation. She's literally started her journey in the space, working with entrepreneurs, helping build this enterprise development beneficiaries. She went on to also be an entrepreneur herself. I think the longest time she spent was also with GIBS, really providing some support to entrepreneurs that are building innovative solutions. She went and also did some work at FNB, where she kind of worked, added value on the enterprise side, enabling stakeholders, partners, entrepreneurs and businesses really with solutions that enable them to commercialize and build, but also kind of improving the offering, the USP from the side of FNB when working with clients and businesses there. And she just recently, literally this month, I think this is the third week as the head of fintech integration at Liberty. So please, I just want to ask for your patience. Back of what she will be possibly talking about will be slanting towards the bank, because it just literally started at Liberty. But it'll be interesting to see what are some of the thoughts that are key there. She's got an MBA, so very educated, very learned, and very experienced. So Akona, do you have your deck open?
So OP, I'll be doing things a little bit differently. So because I want to take everyone on a story, I want to start with the video, and then from there I will upload my deck. Perfect.
All right, cool. Great. 5 minutes. Sure, go for it.
Awesome.
Sorry, Akona, we don't have audio on your on your.
Oh, does it not have audio?
No, it doesn't have audio.
Give me 2 seconds. Sorry about that.
No worries.
I did put audio share. So let me share computer sound.
In the day,
does it have audio now, OP?
We wanted to share information. It looked something like this. Then we figured out a way to share information faster.
Yes, it does. Yes.
Over time, our desire to share information led to increasingly complex technology that could share news faster and faster. The people who created this technology envisioned a future where we could share information instantly. They dreamed that we would make connections that would lead us to a greater understanding. Funny thing is, the more connected we are, the less we want to hear what anyone else has to say.
Guys, dinner's ready. Dinner!
Oh, dinner's ready. Why didn't you just tell us?
Hi, Akona. I'm not sure about Blackish.
I beg yours?
I'm saying Blackish. The dinner's ready.
It really was just, it was just a way that I wanted to introduce what I'm going to be speaking about. So in this topic, thanks for the introduction, OP. So good evening to absolutely everybody. And it's such a privilege and a pleasure for me to be sharing this panel today. So in my response, what I wanted to speak about under the topic of understanding fintech and disruption in South Africa, I wanted to speak on understanding consumer behavior and using gamification as a technique to actually engage clients. So part one of my very, very brief presentation, OP, I wanted to speak about engagement from a consumer and a competitor perspective. So how do you engage with this audience? So I just want to share a story. 3 weeks ago, I went to visit my folks, and my dad and I played a game. And the game was, guess what I carried in my briefcase before mobile technology came and disrupted absolutely everything. And obviously, as we made this list, it evolved to other widgets that have been disrupted from mobile technology. So, I mean, you start off with phone books, calculators, rulers, stationery, notepads, magazines, evolving to envelope stamps, photo albums, cameras, video cameras, televisions, eventually evolving to something more relevant to this topic, wallets, cash, checkbook, cards, financial advisors. At the end of the day, the list is endless. So people are often judging people who are always on their phones. You always assume that they're not being productive, that they're always on social media. And yes, at times it's not 100% social, but could these guys simply not be doing what they were doing before? But right now they've got one central device or one central marketplace to achieve all the objectives that they did before. So let's look at picture one. In picture one, could they not be looking at the menu to order food? Picture two, could she not be trying to book for an aerobics class and then her figuring out, oh my goodness, the class is full? Picture three, could they not be paying bills, buying gifts, making invitations? Picture four, could they not be studying for an exam? Picture five, they're watching TV material that is relevant to them and not having to watch something only because there's one television at the house. And picture six, could they not be using GPS as a functionality to get to where they want to go? So what I'm trying to illustrate with these different pictures is that just because you're on your phone, it doesn't mean that you're being unproductive. Things that we used to do differently have now been centralized onto a mobile platform, which then brings me to my question. Do we really, really understand how powerful the mobile phone or digital technology is? So what? So what does this mean? So what obstacles and what challenges does this bring? So starting with number one, it brings a central marketplace for activity. So as we all know, on the 27th of March, we launched into level 5 lockdown. And we were pretty much mandated to stay at home all times. And even though this was a massive inconvenience and somewhat disruption for most of our lives carried on. Just because you didn't have to go to work, it didn't mean that you couldn't be productive and earn a salary. Just because your kids couldn't go to school, it didn't mean that they couldn't get an education. Just because Virgin Active was closed, it didn't mean that you couldn't get in a workout. Just because you were trying to avoid being at the shops, it didn't mean that you didn't get your groceries because you made use of online deliveries. So with this very complex matrix type structure, what does it mean for regulation, which is point number 2, right? How do you even start to regulate this monster? How do you even start to regulate the central marketplace of all of these complex activities? Number 3, right? As we all know that the biggest barrier of entry for most industries is regulation. So with this kind of like platform not really regulated, what does it mean for barriers of entry? It means that they are immediately loosened. Number 4, the skills that are required to actually transact, or the skills that are required to actually build marketplaces on the mobile device, it's not so much basic, but they are a lot less complex than before. And I mean, if you can't build an app, you can even Google how to build an app, and that information is readily available to you, and you'll be building an app in no time. And point number 5, I wanted to speak to the notion of gray swans, but I'll unpack the notion of gray swans just 2 slides from now. So slide number 3. So we ask ourselves, what do these companies have in common? So here we've got Macintosh, Mac, which traditionally made computer hardware. We've got ShopRite, which is an FMCG. We have Amazon, which launched as a company, a digital platform to sell books. We've got MTN, which is an ICT company, which is represented in the panel today. We've got Facebook, which launched as a social media site. We've got Samsung, which actually started off as a trading company, but quickly ventured into electronics. And we've got Google, a search engine company, and we've got Discovery starting off in insurance, but now seems to be in absolutely everything else. We ask ourselves, what do these companies have in common? In July 2019, McKinsey published an article listing 5 scenarios called gray swans that will trigger disruption in the banking industry and how banks need to monitor these scenarios. So I'll go through them very quickly, but I'll expand or unpack one specific scenario. So extreme geopolitical events. I mean, we've witnessed a massive social economic event, an apocalyptic cyber attack. So waking up one morning and you've got 0.000 Rand in your bank account. Conscious banking. So basically millennials want to transact with companies that don't solely or exclusively have a profit prerogative, that are also, that take the 999 reporting very seriously. So that care about society, care about nature, care about the environment. New regulations, and what Yolanda was speaking about, which is big techs going into banking. So now we see that what was previously exclusive to what we call traditional banking has been disrupted. A myriad of companies, from FMCG to digital reading platforms like a digital exclusive books, to ICT, which we spoke about, to traditional electronics, to medical aid companies. This would not be possible if it wasn't for digital technology. And the topic that we are unpacking today is unlocking the fintech potential in South Africa as part of the Digital Disruption Series. Ladies and gentlemen, an industry with the highest barriers of entry, highest regulation, which has held oligarchic structures for years, has been disrupted by these companies. So as Yolanda said, that clearly banks are being displaced, but the question then becomes, how do we use gamification to create value and as a catalyst for growth? So I just literally merged her words in to my presentation, because it's very clear now that industries are no longer ring-fenced. It's an open playground. And this open playground is what provides opportunity for fintechs to play in a space that was traditionally held by, in South Africa, 5 very powerful institutions. So you can either have a defensive strategy to this disruption, or you can proactively understand the tools for a profitable client engagement. We have figured out that the clients won't find you in the U magazine. They will find you online, but with the thousands and thousands and millions of markets that are online, how will you set yourself apart? What then becomes your differentiation strategy? So with so many options and so little barriers of entry, why should clients engage with you? What value proposition are you giving the customer? So my first phone was a Nokia 5210 actually. My parents bought it for me as a parting gift when I went to university. I was in essence given a budget and I had to choose what phone I wanted. And I chose a Nokia because quite simply, I wanted to play Snake all day. So I chose a phone based on auxiliary function, and I'm not the only one. There is an entire market of people who choose based on customer experience and not just the core function. So the gratification and the yield that I got from playing Snake gave me more satisfaction than the actual core function of the phone. The overall customer experience is what I looked for back then in choosing something that was pretty much used to just communicate with. So then the question remains, how will you set yourself apart from your core offering? So what is gamification? So in looking at the first picture, dopamine, right, which is the essence of our gamification, is a neurotransmitter in your brain that is activated when you achieve something positive. So in essence, it just makes you feel good. The reward pathway in your brain plays an integral role in how we engage. So the reward pathway tells us to repeat what we did to achieve that level of satisfaction. So let me give you an example in something that I can relate to. So I love going to the gym, and I'm a member of Vitality, and I'm also a member of Virgin Active. So as part of Virgin Active, all I have to do is go to gym 3 times a day and get 900 points for me to achieve a smoothie. So I've done something, I've gone to gym and I've done it well. So I've gone to gym and I've achieved my 900 points. My brain gets a reward. So that would be an intrinsic reward, which is a reward that's internal satisfaction for myself. But in this case, I get a smoothie. So for going to gym and getting 900 points, I get a smoothie. And guess what? Because I felt good, I want to repeat the process. And guess what? Next week, I'll be going to gym again. So what does this mean for Discovery? What it means for Discovery is that they've got one very, very healthy client who's paying premiums. So I'm paying my monthly prescription, but I'm very unlikely to claim because I'm healthy, because I'm going to gym multiple times a week. So they get their premiums and they reduce their costs because they're not really paying out a claim, and I get my smoothie. So it becomes a win-win situation. And that's the essence of gamification. And then also there's this element of instant gratification. So we live in a world of instant gratification. We don't want to wait until the end of the year to get our results. We don't want to wait until next week to watch the next episode of Game of Thrones. We want it now. So what instant gratification does is it pretty much allows us to control how we progress in terms of the games that we're playing or in terms of what we're trying to achieve. So if I want to finish the game now, I can finish it now. If I want to space it over a couple of days, I have the control to do it. And what trends have shown is that people would much rather receive things sooner rather than later, which is what instant gratification gives us.
Sorry, Akona.
Yes.
I need you to kindly wrap up. We've run out of time. If you could wrap up in the next minute. Okay, perfect.
And then in terms of the drivers of human behaviors are driven by status, access, power, and stuff. So the end game is we understand that the customer has a new and dominant engagement tool that has attracted a lot of players in the market. So the question then becomes, how do you compete in this environment? And that's where gamification comes into play. Thanks.
Great. Thank you so much for that, Akon. It is important if we're going to be disrupting the industry that we address how we develop and build products that really respond to the needs and the preferences of consumers. So this is a fascinating thing. You also are alluding to the fact that you will require some enablers in that process if we are to have more consumers really enjoying the benefits of some of these innovative products in this market. So that's an interesting thing. I'm already observing some questions that are coming from Michael around security and whatnot. Some comments from Buitumelo. I'm also seeing questions that are coming in the Q&A section. So there's tons of that. So please keep posing those in there. I see your questions and comments. Tabo, I see that. Didn't Tabo Mshima. So please keep posting that. If I can request also the audience, if you guys are keen on social media, please use hashtag ABSIP DDS 2020 just to check the conversation. Put the conversations out there. Most of our panelists are also active on social media. I know for a fact Yolanda and Lebo are in that very active on those platforms. So let's really just put that content and some of the gems that come from some of our speakers. Let's share, because it's important, I guess, for the purposes of what we are trying to do as ABSIP. So thank you so much, Akon. I want to invite Lebo at this point, who's going to give a very interesting take. Lebo Mkhabudi is an award-winning digital financial services expert with over 10 years of experience building payments and financial inclusion solutions across Africa and Asia. She was part of the Fundamo team that increased mobile money usage in emerging markets such as Nigeria, Pakistan, and Tanzania, developed mobile payment solutions for banks and mobile network operators, or MNOs, advised regulators on financial inclusion policies. So this will be interesting to see how she comments on some of the points that Akon has mentioned. Lebo did also find, she launched and found Booty Shoes and an e-commerce platform, and later merged her entrepreneurial and corporate experience to support tech startups. And this is where she is right now across Africa with venture building support. She is the BFA Global Catalyst Fund Country Manager and holds an MBA and a Bachelor of Commerce degree. She served as a non-executive director in Transaction Junction and is an advisory board member at Akiba Digital. Akiba Digital, it's a fintech startup that we also know of. So this is going to be interesting. Again, taking on what Yolanda was talking about, the inclusion, the participation of different fintech startups, building solutions, innovations, how they are designing new products, how are they enabling everyone else, bringing everyone else in the ecosystem, including as many people to really access this financial services solution. So Lebo, I want to hand over the reins to you. I understand you're not sharing any decks, so you'll be talking to some of these key points. So I look forward, and I speak on behalf of all our audience, that we are looking forward to hearing from your end on the tech side, on the tech innovation, on the tech startup side. What are you seeing? What are you observing? What are your arguments, and what are your key themes there? Lebo, over to you.
Thank you so much, Octavia. Good evening, everybody on this platform. Pleasure to be part of this conversation. Please excuse my voice, but I think I am audible. So I am the country manager of Catalyst Fund, which is a global inclusive fintech accelerator that supports inclusive fintech startups in 5 markets: Nigeria, Kenya, South Africa, India, and Mexico. And we provide grant capital to startups, as well as technical assistance to help the startups grow. And really, we're filling the gap that most startups build companies, right, with money from friends and family, and then build some level of traction, but then run out of capital. And at that point, they experience a valley of death, because there's very few venture capital firms, or very few very little funding for really small startups. And we're filling that gap. We come in, provide grant capital, as well as the technical assistance to build the capabilities of startups. We specifically focus on inclusive fintech startups that create appropriate, accessible, and relevant solutions for the underserved communities. So coming back to what Yolanda said, is that largely fintech in South Africa has largely been for the urban consumer, and it's largely been driven by payments, and maybe now going into lending, but it hasn't necessarily been relevant for the underserved communities. In South Africa, where we have dual economies, the urban environment and the rural consumer has been underserved. The small business has also also been underserved. So we support startups that provide solutions for that underserved community. And really, when it comes to financial inclusion as well, which you also made mention to, is that in South Africa, we've largely focused on access. So we've looked at, do people access bank accounts? Do people access wallets? Even in the rest of the continent, we've largely spoken about access to wallets, access to bank accounts, but never spoken about usage. And really, what is inclusion? Inclusion should speak to, are you using your bank account? Do you have the appropriate financial services that are relevant to your context? Do you have affordable financial solutions that are appropriate to your context? I mean, in South Africa, we also made the mistake of the Mzansi account, right? A couple of years ago, we looked at the Mzansi account and it was a success, but all it did is that it gave access to bank accounts, but it didn't drive usage. So access is not enough if at the end of the month, people just withdraw the money. And that's what we've seen in South Africa and in other markets across the emerging markets, is that if people just have access to bank accounts and it's not affordable, they just withdraw the cash at the end of the month, then they're not included. So as Catalyst Fund, we really focus on solutions that are affordable, right? And what do I mean by that? And what I mean by accessible? What do I mean by appropriate? And this may even answer some of the questions in the chat, is that we need solutions that are relevant for the small business owner. We need solutions that are relevant for the informal trader, that trader that is selling fruits and vegetables. Do they have a financial services solution that is appropriate for them? how do they access credit? How does the spaza owner that has been running for 15 years, running a business quite successfully, do they have appropriate credit for them? It's a question. And in South Africa, I don't think so, right? Yes, we have banks. Yes, we have mobile network operators providing digital financial services, but it really needs to be appropriate financial services to drive inclusion. So we support startups. I'll speak to some of our startups that provide these solutions. So we have Spoon Money that extends credit actually to informal traders and really leverages the stokvel ecosystem that we all know of and the savings ecosystem of a stokvel. So they provide credit to female traders who have created a stokvel and really providing unsecured lending, leveraging technology to create credit scoring algorithms using the data that is relevant for that ecosystem, right? And when it comes to data, I mean, you can use mobile transaction data. You can use behavioral data of how often does a person buy from a spaza shop. You can use different types of data that is not traditionally used by a bank to offer that unsecured lending. We also have a company that creates digital m-commerce in the informal retail market. Sokowatch in Kenya, where really they've enabled a spaza owner to access essential services leveraging technology. So think of it this way: a spaza owner orders stock on their phone, they have the mobile phone, they order stock on the phone, the stock is delivered to the spaza shop, and then they're able to sell and to trade using that device as well, right? And as they trade using that device, you then collect all the data of their trading behavior, and through that, you then enable access to credit. And with COVID, which we're in right now, a lot of small businesses are struggling, as we all know. A lot of small businesses require access to financing. And if we don't create the relevant tools that enable small businesses to access financing, as a country, you know, we will struggle. So it's really, we need financial services that are relevant for small businesses. Again, responding to Yolanda's keynote, she spoke about lending, that there are a lot of lending solutions. And in South Africa, we actually do have access to credit, a lot of access to credit when it comes to the consumer, and sometimes too much credit. But again, the small businesses, the informal trader cannot access credit, and really solutions that enable that small business to access credit. But another thing that we do is work with ecosystems, right? Yolanda spoke to abundance. She mentioned the theme of abundance, and that fintech ecosystems require different stakeholders, which we have here in our panel today. So we do need the banks. We do need mobile network operators. We do need regulators. And as Catalyst Fund, we actually work with all those different stakeholders. And in order to have a thriving fintech ecosystem, financial technology ecosystem, we need all these players to play their part. But what we more need is collaboration between all these players. Let me give you an example. Startup and corporate partnerships enable growth of fintech. So a startup, and it was one of the questions also on the chat, a startup enabling digital insurance and enabling consumers to digitally access insurance, even enabling to have claims digitally, can partner then with a bank, right, to expand their reach. So we have a startup called MobiLife within our portfolio that actually offers digital insurance, and they partnered with Standard Bank. And through that partnership, they were able to expand their reach and reach more consumers. So startup and corporate partnerships are also very necessary to ensure that we have a thriving and a growing fintech ecosystem, but to ensure that more people get access to the relevant solutions. What I am personally passionate about startups is that they're close to the ground, they are agile, they're flexible, and they really seek to understand the pain points of a consumer and seek to solve and develop a solution that addresses the pain points of a consumer. And they continue to reiterate, right? They launch a product, launch a financial services product, understand the market, listen to the market, is it responding, and then go back and reiterate the product. A startup, because of how they are organized, is able to respond quicker than most corporates in terms of the needs of the market. A startup, even with COVID now, they're quickly able to assess, okay, what do people need now? Everybody's going digital. Let's create a digital e-commerce platform, right? In order for people to buy online and access credit online. For example, we saw, we may have seen Yoko responded quite quickly to the needs of their small businesses and their clients on the ground. Their small businesses were shutting down. Some of them could no longer operate because during lockdown, we could not move around. But Yoko quickly enabled e-commerce platforms for all their customers, where they sent a transaction, they sent rather a link to enable their small businesses to accept e-commerce payments. That was a quick response that was necessary. And startups are able to do that, right? They're on the ground, they create relevant products, but partnerships are necessary for them to expand across markets. Another question that was on the chat was about regulators and what is the role of regulators? And interestingly enough, I just came from a workshop with the fintech regulators in South Africa, where we had the National Credit Regulator, the National Treasury, the Financial Conduct Authority as part of that conversation. And what's fantastic in this country, we actually are leapfrogging this, where we have created a regulatory sandbox. In South Africa, we do have one that was launched last year. And the regulators are actually very open and willing to listen to what are the fintechs doing, right? What innovations are out there? They're willing to understand. And the reason they're willing to do that, so that they can actually create enabling policies. And the role of a regulator is really to create an enabling policy environment where innovation thrives. Regulation should not be a barrier to entry. But at the same time, it's important to understand that the role of a regulator is to also protect the consumer. Sometimes innovators think, oh no, this regulation is stifling, they're not enabling me to play. But the other point is that the regulator needs to protect the consumer, needs to ensure that there's stability. And in South Africa, we have a very stable financial services because we have a great regulator. What's happening now, even in the regulation in South Africa, is that we have an intergovernmental working group that is actually brought together all the regulators, SARS, National Treasury, National Credit Regulator, all the regulators have come together as a body to, first of all, engage in these discussions, but also then to align and their policies for digital platforms. Right now, as we speak, this working group is working on a digital platforms position paper. And they opened up to say, we're working on this and we want to listen to the fintechs. We want to listen to the SME lending company. We want to listen to those fintechs that are enabling spaza shops to access credit. We want to listen to a fintech enabling wealth and investment, crowdfunding, for example. We want to listen to them and ensure that this digital platforms position paper is enabling, right, for this ecosystem to thrive. So they are actually open to that. And as part of what we do as Catalyst Fund is actually work with regulators, work with all these different stakeholders, work with banks, work with MNOs to ensure a thriving fintech ecosystem. But lasting thought as well is that I think usage is really, really, really important. It's not just access. That's one thing, but also when it comes to fintech, fintech is broad, right? It's not just payments. It's been traditionally payments, but it's lending, it's wealth and investments. We've got a startup called Cariwise in Nigeria that provides savings and wealth and investment, a tool and an app to do that. It actually provides millennials to save as well as to invest. And interesting enough, even in COVID, they actually saw an upshoot where people realized that if I do not save, I will run out of money. And people saved more, which was very interesting. But also people saw the necessity of emergency funds, right? And they started putting more money away, those that could, those that didn't lose their jobs, they put more money away into Kariwai's platform. So fintech is broad. It's not just payments, it's lending, it's insurance, it's wealth and investments. And the reason I'm saying that is that within the audience, we probably have a myriad of expertise, a myriad of different sectors within financial services that all sectors can play, right? As long as you leverage technology and leverage technology for financial services, you're a fintech player. So I'll leave it there for now.
Great, thanks, Leo. That was a mouthful. I wish we had more time. I hope the leadership of ABSIP, is prepared to consider a much longer conversation, because we can go on and on. We can go on and on. I mean, there's tons and tons of questions that I want to ask, and I'm seeing people who also want to ask very bold kind of views that and based on experience as well that you guys are seeing. And I'm curious to understand, what do you guys imagine to be the future of fintech? But I want you to park, don't comment on that yet, because I want to bring in Khomotso to come and just give like a last word as a sponsor of this session, to tell us, as Standard Bank, one of the largest banks in the country and continent, what is their view? We've had Yolanda talk around how they see banks still operating. They are not seeing themselves as competitors to the banks. They want to complement them. You're talking about the fact that the ecosystem needs really to work together and collaborate. Akona is saying, listen, we want you have to center the consumer in all of this, right? Yolanda is saying, we of course, we're centering the consumer because we want to bring everybody with us. We want to make sure that we drive that inclusion. So this is again very interesting to see how then Standard Bank as a a traditional bank, what are they seeing in the market? Are they changing the way in which they do business? Are they considering other things that are important, that are coming from the technology startups, for example, either through acquisitions, the product designs that they have, the different offerings around investment, credit, payments, remittances, what is it that they are doing on that? Is their workforce even appropriately equipped to manage this constant change that keeps to the market seems to have seems to grapple with? I think there's a gentleman or somebody in the comments talk about it seems like it's really just about the customer. Everything else is really just moving around, enabling the customer to give them more access. So I want to invite Khomotso as a CIO of Standard Bank. Just a little bit background on Khomotso's kind of history and where he's come. He's got an MBL, Masters in Business Leadership. He's been at Standard Bank for years. I mean, he started at Standard Bank. You'll have to correct me here, but you've managed. You've been a head of national improvement. You've managed banking operations. You've headed, transformation and enablement, process engineering. You've managed and led digital banking and e-commerce. Right? You now are the CIO of the rest of the bank. So I want to give you the opportunity, 5 minutes, if you can, just keep it to the time, and just share with us your thoughts on this topic.
No, thank you, Octavius, and good evening to everyone. In anticipating that we've got lots of innovators, lots of investors, lots of professionals listening in, even if they are already there or aspiring, I kind of want to come with sort of a different angle to bring it all together. And maybe it's anchored in Standard Bank's purpose statement, where we say Africa is our home and we drive a growth. Because what we really want to do, we recognize that Standard Bank, being the biggest financial services company in the continent, it's got a very important and critical role to play. So then the angle is, okay, how do we then do this in a way let's say, that can allow us to double this industry and allow it to contribute to the economic growth of the continent and South Africa. So maybe let me start with, why does this discussion matter from an economic point of view? This industry is actually estimated to be worth about 300 billion globally. It just happens that that's round about what the nominal GDP is for South Africa. So it just gives you the scale of what we are talking about. We know that is one of the fastest growing industries in the world, growing between 20 and 30%. Interestingly, during COVID-19, it's been growing even faster than other industries, as and when the world is busy reimagining how life could be going forward. In the African continent, we estimate that it's somewhere between 5 and 10% of FDI actually is pumped into this industry. So you can tell that it's attracting a lot of interest from investors. It's attracting a lot of interest from consumers as well, as previous speakers have spoken about the role it plays in actually simplifying things and allowing people to live their lives better. So we know that it matters from an economic point of view. Then the next question is, okay, why will it succeed in the African continent or in South Africa? Are there necessary conditions for it to thrive already there, or are they building up? And there are many, many factors, but I will touch on the following. The first thing is that we've got a very, very young population in the African continent. And in fact, it will continue to grow. It's estimated that the population in the continent will double by 2050. You know, the other day I realized that actually I may still be alive in 2050 because it's only 30 years from now. And not to disrespect people of my age group, the young population tends to be better creators of value because they have a lot of energy, they see lots of possibilities, and they have a growth mindset in general. And there's a good correlation between where you have a young population and output in general in terms of innovation and new ideas. And we have seen this in the African continent. Young people also tend to consume a lot more in the modern way, meaning that a lot of the solutions that the fintech industry is creating are most likely going to be used by younger people as opposed to older people. So that's quite a very important thing. How do we leverage this demographic dividend that we have in the continent? We also have a very high percentage of underserviced people in the continent. And there's a huge opportunity to actually use technology to scale to places that we will not necessarily have been to scale using physical infrastructure. We've got greater integration happening now in the African continent. The Africa Trade Agreement will open a lot of opportunities for us to leverage. And the question is, how do we then bring the fintech industry and the ecosystem through which fintechs operate to take advantage of this? Yolanda made the point earlier around mobile phone penetration and also prices dropping very, very fast, actually creating access, because a lot of the solutions will scale with the number one enabler actually being a smartphone. So this is actually fantastic news to actually have this penetration and prices dropping in the African continent. And one of the things we mustn't take for granted is that we possibly have the longest period of having peace in the African continent. So we've got less wars than probably in a long, long, long time. That actually focuses people on creating value as opposed to actually fighting. So in a way, the necessary conditions for this to thrive in the African continent are there. And it's really about how do we take advantage of them. Now, there are many, many things we need to do, but I've identified the following three that we need to do very, very well. The first one is, how do we make the circle bigger? Meaning that the sin that the banks have always been accused of doing, which is actually existing just for those that have access. We need to be sure that the creators in the fintech industry are not actually doing the same thing. Meaning, we have to create opportunities that potential creators in rural villages in South Africa or in Nairobi are able to enter this ecosystem. Let me give you an example. So if you've got a young person in Guyana who's got a brilliant idea about how to create a digital marketplace that will connect all of the banana farmers in the north and connect them with actually a market of buyers in Europe, and to actually significantly lower their cost of doing business, that is actually going to create more jobs and is just going to actually increase the way in which the economy is growing. Now today, if they come to a bank or they go to a development house, anywhere they go, they will be considered to be a high risk investment and unlikely that they will be supported. Now, it's the role of all of us to kind of think differently around how do we create access? How do we open it up for everybody to be able to participate? Because if we do that, we are able to unleash the innovation muscle of all the young people in the continent and only those that are privileged. Let me expand on Yolanda's discussion on skills, and let me add adaptability as well. There's no doubt that education is improving in general from an access perspective in the continent. We may have a separate debate around quality, but there are more people actually accessing education, which is a good thing. And that gives us the opportunity to actually get the education to focus on the right thing. So let's get them to be involved with the right skills at a young age. So we need to get them actually learning how to do development, how to do programming as young as possible, because they'll be a lot more relevant when they grow up. Now, when I talk about adaptability, there's a lot of skills we know that will be replaced by new skills going forward. Now, how do we get everybody in a mindset where we are adaptable and we're able to actually transition? I'm sure if I go to a braai and then suggest to a number of management accountants that we will be using artificial intelligence sometime this year, next year, and that all the management accounting jobs that are focused on spreadsheets will be gone, this will not be met with very, very friendly comments, but it's the reality. Then the question is, how can we then repurpose and reskill those skills so that they are able to add value differently? So we need to actually solve that problem and solve it fast. The third and last thing that I believe we need to do well is that when you think about fintechs and financial services companies and the big companies that are playing in this space, they have a love-hate relationship, but we could turn this into a beautiful love story, because the fintechs, they've got speed, they do everything fast, they can innovate, they've got very high risk appetite. Whereas the banks have got scale, they've got lots of clients, and they've got big balance sheets. Now, you know that saying that opposites attract. We could actually get this partnership to work in a way that we make the circle bigger, as opposed to currently some of the wars that happen in this space, because it could really be a beautiful marriage, because these opposites actually attract very well. And we need to do that by a number of things, including just creating a common playing field where we can talk to each other with common language. Let me give you an example. When a fintech comes to the bank and they say they want to collaborate, typically what happens is one day we'll send them a document, 200 pages, prepared by the best lawyer in the country. For them to interpret that document, it will just kill their spirit, and they will just not be able to actually even start to have the discussion, because we have just killed them. Now we need to create some sort of playing field that allows the dating and the matchmaking to happen in a way that is non-violent and actually creates safe ground for the partnership to thrive. Now, the fintechs themselves, the innovators and the creators, they also need to have a mindset of collaborating and actually paying it forward. Let me give you an example. When Google created Google Maps, they actually opened up that API to be used by any other fintech in the world that requires that technology to make money. We don't have a lot of that in the fintech industry. The ability to think that by collaborating, we can make the circle bigger. And when the circle is bigger, everybody is benefiting. Let me wrap up by saying that COVID-19 has created the perfect conditions for us to have this discussion, because it's challenged us to reset the way we think about the world and the way the world will work going forward. So we must take this opportunity in the reset process to challenge all players in the ecosystem where fintechs operate, including the regulators, to be a lot more nicer around how do we create value in the ecosystem in a way that we can double the value of this industry in the African continent in the next 5 to 10 years. And that will automatically actually drive the economic growth in the continent, which will make us very happy at Standard Bank, because we will be driving Africa's growth. Let me wrap it there, Octavius, and then we can go into questions. Thank you.
Great, thank you so much, Khomotso. I don't know, Disemo, is there a way that we can extend this this webinar by another 2 hours and allow for this conversation, because it's getting hot. It's getting hot. Yolanda, so I want to quickly go back to you, right? So there's a lot of questions that are being asked. You've heard what Akon has said. You've just now heard Khomotso saying, listen, in fact, we could leverage the power that comes with this opposite attraction and create this marriage. Lebo has detailed how they're seeing fintech companies kind of building all the solutions. I have one question, and if you could just briefly comment on that in under 1 minute, and then I'll pull one question. There's a gentleman who's asked a very important question here. What your question around? So, can MNOs reduce the data prices?
MNOs have been reducing data prices. If you actually look at what you could buy with $100 last year, or even the year before, you must probably buying 3 times what you were paying for $400 right now. So which means that effectively we have actually reduced pricing. And we will continue to do so as we invest in new technologies and get access to spectrum. So if I look at what we call our ERMB, which is basically the equivalent of saying, what is the cost per megabyte of data, right? We have been seeing that actually consistently go down in our industry. By the way, telco is one of the very few price deflationary environments you have. What we actually grow on volume. So the only compensating factor is not price, it actually is volume that is actually making us grow as more and more people come onto the networks and people consume more and more data. And by the way, it was the same thing with voice as well.
Yeah. Okay. Fantastic. Thanks for that. There's a question from Debo Roma Wisela here, who's asking about, what are points of infrastructure that you feel are lagging behind, that are causing this delay in the rapid transformation of fourth industrial revolution, especially for the telcos and digital money. This is from Debo Roma Wisela. Yolanda, your take?
Yeah, I guess, from a South African specific point of view, it has been for us regulation. For example, right now, as we relaunch, we're having a lot of challenges around distribution. As I said, in countries like Rwanda, I'm able to go to Rwanda, talk to the central bank, and actually get them, for example, during COVID, allow for bank to wallet transfer without any friction, and basically actually push that. And as a result of that, during COVID, the people of Rwanda didn't actually feel the constraints, and then come to another market where we actually had those constraints, and the regulation and the regulators were not fast enough to actually adapt. Then we had a slowdown in some of the services that we could provide. Africa is still very physical, and that's what people forget. Our smartphone penetration is about 35 to 37%. So that means that a lot of people are not able to access a lot of services except through their feature phone. What is important is that mobile money works on a feature phone. Today in South Africa, we've got 99.99% accessibility coverage on 2G. And that means anyone and everyone, it doesn't matter where you are, you have access. On 3G, we have about 99% population coverage. So everyone in South Africa, other than if you are under some hole, then you should have 3G coverage. The people that are struggling for now is 4G, where we actually have around 95%, 96% population coverage. So from that perspective, today, how we design our solutions for financial inclusion is really around a 2G phone first. So basically, when I talk about our 41 million customers, less than 1 million of them are using a smartphone application to access our services. They're using USSD as the main channel to actually access services. And that's across the board, whether that's insurance, whether that's investment, whether that's lending, whether that's peer-to-peer transfers, whether that is remittance services, all of that we are doing through USSD.
Yeah, cool. Great. I hope Tom was happy. Couple of questions for Akona. There's a view that I think, and this is coming from this question from Bangwani Mapope, that asking you what are the downsides of gamification and what are the risks that are associated with this, whether cyber or whatever the case may be, and how organizations can manage this, especially in the financial services sector. This is from Bangwani Mapope, and I think there also I've just been seeing a lot of love and people asking for your contact details in the chat room as well, Akona. So please do engage in the chat room when you've got the time. But the question that I really just don't want to share with you out of the many questions is, what are some of the risks and some of the downsides of this gamification that you talk about?
Thanks for the question. So, I can find two. And the first one would be a diminishing marginal utility. So as people engage, first and foremost, there are a myriad of games to engage with. And as you engage, people lose interest quickly because there's so many options to choose from. So that's the first step. That's something I see as a downside, which then leads to point number two, which means that a lot of very high research and development costs are required to ensure that you keep the engager engaged or the consumer engaged. Because primarily, there's another question that came up about monetizing gamification, and I hope to answer that question. We're not really gamifying to create money. We're more gamifying to enhance the customer experience. So in that spirit of pivoting and in that spirit of being consistently customer-centric, you really need to ensure that you understand your consumer at every single point in their life. And you need to understand how trends affect the decisions that your consumers make. So just in summary, to answer your questions, it's diminishing marginal utility and decrease in interest in the gamification, which then leads to increased costs in research and development. I hope that answers your question.
Cool. Thank you so much, Akona, for that clarification, that response. I want to move quickly to Lebo. I see you are also engaging the audience in the chat room. People are asking for your contact details. ABSIP Kungu is asking you in there. A few other guys that we know in the ecosystem. Michael is commenting. Spamandla is commenting, giving some reaction to what you guys have shared. Snetemba also liking Lebo's argument. So a couple of questions. One question from my end, Lebo, is, so we're observing what the Chinese East Asians are doing in the space. And you've talked about how the different solutions we're building on the continent, how we're moving, the infrastructure that we have. Now, the question I have for you is, what does the future of fintech look like for South Africa specifically? And if you so wish, what does that look like for Africa as a whole? Are we going to a point where we are no longer talking about financial services or financial institutions or banking in the form of physical infrastructure or institutionalized? It's more experience based on even what Akona is talking about. What is the future of fintech?
Thanks, Octavia. So in terms of contact details, everybody is welcome to contact me on LinkedIn. With Lebo Mokhabudi, you can contact me on LinkedIn and we can engage there. In terms of the future of fintech, you made reference to China, right? And in China, we have WeChat, we have Alipay that have done great things from a tech point of view. And what they've done is really provided services and gotten into a consumer's behavior. So payments is no longer the thing. It's how can you embed financial services, embed fintech into the customer's behavior, right? They don't talk about payments. It's about, I have this one app that with this one app, I can do everything. So you look at Uber, you look at Amazon, no one talks about what card do you use for Uber, no one talks about, what's your bank, right? When it comes to Uber, none of us talk about that, and that's really the future of technology, not just fintech. The future of technology is embedding it into our daily life, right? When we do things, we just do payments, but we don't talk about the bank behind it. We don't talk about, is it the MNO, is it the bank, is it the fintech? We talk about how can we use digital tools or technology to make our lives easier. And I think that's also related to then the future of fintech, that it needs to be embedded into other verticals. So fintech needs to be embedded into health services. Fintech embedded into education, right? Embedding fintech for financial services or financial technology rather, into agriculture as well. I think that's another thing that we really, really need to see in South Africa, is embedding financial technology into agriculture. That's something that we've hardly spoken about here. And it's something that I've seen done well in Kenya, done well even in Ghana, where smallholder farmers are leveraging financial technology to either purchase agricultural products. They're leveraging technology for crop insurance. It'd be great if some of the innovators within our audience develop solutions for agriculture. I think there is definitely still a space there, and agriculture in Africa is big, right? Not just South Africa. The minute you create a relevant solution for agriculture, you can drive it across the continent. But I think also the opportunity with fintech is that it's borderless. It's not just a South Africa solution, a solution that you create that is relevant and that is appropriate, that services the needs or solves problems, right, can be borderless and be used across the continent, across the world. We live in now a borderless world, right? So it's not just developing South Africa solutions, but really creating solutions that are relevant and solve problems.
I mean, we left with 1 minute, and the comments and in the Q&A sections. Thank you so much, Lebu. And I'm going to put this challenge to the leadership of ABSIP. Avila argues that this is just opening remarks. This session was just opening remarks. We need a follow-up, right? So, Disebo, you and your team at ABSIP, please make something. We need to make a plan. Also, this session, are we able to allow people to watch it again? I'm sure it's been recorded. Yes, it is being recorded. So a copy of this should be made available somewhere on some of the digital platforms that ABSIP has. Just lastly, Khomuso, on your side, you spoke about this marriage. There's a tons of questions that are coming up here talking about how do technology startups, fintech startups, tangibly and practically partner with FSPs? In what ways do they do so? You lamented to the fact that sometimes you'd have to send this 200-page contract, but maybe you need to find ways to work in line with the way the rate at which this guy's and really respond to this kind of question around how people work with banks or financial services providers in the space that are building solutions.
Yeah, no, thanks, Octavius. I think without being theoretical about it, we can make it practical and say we've got lots of problems in society and we need partnerships to solve. In fact, let me put a challenge. Let me challenge ABSIP, since they are a very good industry body that can bring us together. Let's pick one big problem in society and let's say, right, let's invite all the players facilitated by ABSIP so we don't bring our lawyers to the meeting and say, right, how are we going to solve this society problem in a way that will grow the economy and bring all the players? Then we can start there. As opposed to me getting a phone call, Yolanda is going to get a phone call. We could make it that practical and then take it from there, because who are we waiting for? We have to take the initiative to go and do this ourselves. And I can tell you, certainly that I will be happy to participate in such a discussion, as long as we are solving a big societal problem.
Yeah. And I think that challenge, this is exciting, and I'm confident. I certainly am I'm relishing and thinking about, well, we definitely are going to take you on. And I hear I'm at the risk of sounding like I'm representing ABSIP and all its members, but I think it's really something that needs to be done. So we've run out of time that we've set aside for this session. I know everyone wants to engage. The comment sections have been fun. It's been intense. People are sharing, answering questions. The panels are also responding there. Where we can, we're going to try and get all these questions, send them back to the panelists, and from your emails that you've RSVP'd with, really just kind of provide that with you guys, and we'll find other solutions in ways we can consolidate all the questions, because it's important that everyone else's questions gets to be answered. So I want to take this opportunity to thank all the panelists. Thank you, Yolanda, as our keynote address, for giving us a keynote address. Really appreciate the insights that you've shared. Akona from Liberty, appreciate it as well. Lebo, listen, we're excited. I think everyone else now wants to, chat to you and figure out how ways in which they can work with you. So we're taking this challenge around creating that platform to understand what is this problem in the society that all the partners, all the different players in the ecosystem can address. So thank you so much to everybody. I want to then invite Disebo to come and really just close the session for us as an ABSIP rep.
All right, thank you so much, Octavia, for steering the ship for us. It was purely insightful. I think that's the one thing we can take from today, the one word which we can say we took from it, which is insightful. Thank you to our panelists. Thank you so much for your time. We appreciate fitting us in and our guests into your busy schedules during this time. And we did note as well that there is a bigger question that needs to be addressed, and there's a challenge that we must step up to. So to solve that societal challenge, Khomotso, we acknowledge that, and we will look into having that, and the proposal for having a second session that will maybe be delving a bit deeper into solution-driven more talks now. So thank you very much. I just quoted some of the words that you were speaking, Yolanda, on abundance and why we're looking into the sector. Akona, gamification was, your explanation was purely, it was on point. We really then understood how dopamine then comes into the reward system. Sorry you didn't have a lot of time, but your energetic presentation was we enjoyed that. Lebo, on collaboration on startups. I think Octavia's right. Your inbox is going to be filled, but hopefully with more solution-driven startup questions, so that we can get more help in the industry. Khomotso, thank you so much as well. You talked about using technology to scale up better, and I believe that Standard Bank is doing so as well. So without taking too much of everybody's time, I would like you to have a good evening, and God bless.
Thank you. Thank you.
Thank you.
Thank you, everybody.
Keep the conversation going on Twitter. Hashtag is ABSIPDDS 2020.
From as early as I can remember, I had one wish. That my parents could have a voice of their own.
Standard Bank. It can be.
From as early as I can remember, I had one wish. That my parents could have a voice of their own.
Standard Bank. It can be.
From as early as I can remember, I had one wish. That my parents could have a voice of their own.
Standard Bank. It can be.
From as early as I can remember, I had one wish. That my parents could have a voice of their own.
Standard Bank. It can be.